Hi everyone, welcome to Sadibari Japan. Today I want to talk about the qualified invoicing systems. I think some of you already heard about the qualified invoicing systems. This is the major law changes starting October 1st, 2023, and it will impact your business, so please listen carefully. In today's lectures, I want to explain you about what is a qualified invoicing system and also what you have to do depending on situation, because you have the different option according to your situations. So before getting into the detail, I want to explain you about the basic of the Japanese consumption tax rule. The consumption tax is the tax imposed on the services or goods consumed in Japan, and end user or final consumer is bearing the cost of consumption tax. Let's look at this example. Let's say you do the business and you purchase the goods at 110 Japanese yen, including 10 yen of the consumption tax, and you sold it at 220. So you are receiving 10 from your client and you pay 10 yen of the consumption tax to your suppliers, and difference you pay to the tax office. So actually you as a business owner is not bearing the cost of the consumption tax. So as you can see in this example, you are claiming the 10 yen of the consumption tax paid to the suppliers. To claim a consumption tax credit, you have to save the invoice. So right now, the format of invoice, requirement for the format of the invoice is not very strict. So it is called the classified invoice. You just need to classify the amount according to the different tax rate. For example, food or drinks consumption tax rate is 8%. But for the others, 10% consumption tax rate is applied. So you just need to show the amount according to the different tax rate. That is called the classified invoice, and anyone can issue the classified invoice. So even if a supplier is exempted from consumption tax filing and not paying consumption tax, they can still issue the classified invoice. And by saving the classified invoice, you can still claim a consumption tax credit. You can deduct the consumption tax paid to your supplier from the consumption tax payable amount. But from October 1st, 2023, you need to save qualified invoices. Otherwise, you can't claim consumption tax credit. So this is a change of the format of the invoice. So let's look at the example of the qualified invoice. So the only difference from the current classified invoice is the registration ID as a qualified invoice issuers. On the qualified invoice, the registration ID as a qualified invoice issuer need to be stated. The other information, such as the name, date, description, and amount separated by the different tax rate, are already stated on the classified invoice. Number 7, name of the customer can be omitted when the goods or services are sold to the many customers and difficult to know the name of the customers. For example, retailers, restaurant, or taxi. For this business, it will be difficult to know the customer's name. In such a case, the customer's name do not have to be written on the invoice. From the October 1st, 2023, when you receive the invoice, you need to make sure that invoice has the registration IDs. Otherwise, you cannot claim a consumption tax paid. For the next step, I want to talk about what kind of the choice you have. At the beginning of these lectures, I mentioned that you have the different choice depending on situation. Actually, registered as the invoice issuer and get a consumption tax ID is not mandatory, especially if you are exempted from consumption tax filing. It may be a good choice not to register and get the consumption tax ID. Let me explain you about the Japanese tax rule. if your taxable sales is 10 million or less, you are exempted from consumption tax filing. So that means you receive consumption tax from your client, but you don't have to pay to the tax office. This is a strange rule, but it is to save the small business from administrative work, because small business may not have enough capacity to record the transaction in detail and record the consumption tax. So that's why the small business whose taxable sales is 10 million or less are exempted from consumption tax filing. But the tax office do not like this situation, because the small business collect the consumption tax from the client but not paying to the tax office. So that's why the tax office introduced the qualified invoice system. So under the qualified invoice system, your small business client, you need to save the qualified invoice, and qualified invoice can be issued only by the taxable entities and registered invoice issuer. So if you are exempted from consumption tax filing, you can't issue the qualified invoice. That means your client pay consumption tax to you but can't claim a credit. So this will become a problem for your business if you are doing a B2B business. So in case if you're doing a B2B business, I recommend you to get a consumption tax ID and registered as invoice issuer. But in case your business is for B2C types of the business, for example, restaurant or retailers, your customer is not filing consumption tax return. So that means they don't need qualified invoice. So in that case, if you are exempted from consumption tax filing, stay as exempted entities. I think it will be better and enjoy the benefit. So let's summarize. First case, you are already consumption taxable entity because your taxable sales is exceeding 10 million. Go get the consumption tax ID and file application by March 31st, 2023. The second case is you are exempted from consumption tax filing, but your business is business to business. I think you better get the consumption tax ID, although you become a consumption taxable entities. I think it is important to protect your business, to grow your business. The third case, your taxable sales is 10 million or less, but your customer is end user or final consumer. In that case, you do not have to get a consumption tax ID and stay as a consumption tax exempted entity. So this is all about the qualified invoice. I hope my lecture become your help, and good luck for your business. See you next time.